So Jonathan and Brian, thank you so much for joining us. You both have been investing for more than 2 decades now in either the small or the mid-cap U.S. growth stock space. Jonathan, you tend to concentrate on the small cap end of that spectrum. And I was wondering if you could just start by explaining what counts as a small cap stock today, and what are the advantages of investing in this area of the market, in your opinion?
It is really interesting because over my career, the definition of what a small cap stock is has changed dramatically as the market has increased in size over time. If we go back into the very distant past, when I started in the business 28 years ago at Janus, the predecessor to Janus Henderson, the top end of the small cap market cap range was generally perceived to be about $2 billion of market cap. Today, that's really as high as about $10 billion in terms of the top end of the small cap range.
Wow, dramatic change.
It's grown a lot, yeah.
And so are there still advantages then to investing in that small cap space, if we can still call it that?
Yeah, absolutely. What I think is so compelling about investing in small caps is that you really, as an investor, have an opportunity to invest in the innovation engine that has driven the U.S. economy for so many years. And we're fortunate to live in one of the most dynamic economies of the world. And by and large, that's driven by small, innovative companies that are bringing out products and services that are in high demand in the marketplace and going from a small size to a much larger size. And so exposure to small cap companies really gives you that ability to benefit from the innovation in the U.S. economy.
And Brian, when does a company graduate into the mid-cap space, and how does a mid-cap company differ from their small and large-cap peers?
Sure. So we'd probably call the lower end of mid-cap around $7 billion. There can be a little bit of overlap,
a little gray
depending
area,
on how the world is defined, and then kind of all the way up to about $45 billion, which, as Jonathan said, in the mid-cap space, that number was 5 or 6 or 7 billion going back 20 or 30 years. So the size of these companies, just in terms of market cap, has gotten bigger. What I think makes mid-caps unique is that they often exhibit some of the same growth characteristics as small caps. They're not mature companies yet, but they have often proven themselves to be resilient and durable businesses. And in the small cap space, you can find these explosive growers, but there are also some companies that may end up facing competitive threats or new entrants or changes in the landscape that will impact them. The mid-cap companies have gotten through that a lot of the time, so they may not be quite as explosive in growth, but there'll be a little more durability to the business model themselves. And so you get exposure to the growth characteristics without the same vulnerability. And you certainly don't have to kind of wrestle with some of the mature large caps that kind of dominate the top 200 or 300 stocks in the marketplace.
So these companies have gotten over some of their growing pains, so to speak.
Exactly.
Okay. The small and mid-cap universe is very large, right? It's made up of lots of different companies. So what would you say, in your opinion, is some of the most important things that investors should be looking for when they're considering stocks in this area? Brian, maybe we start with you.
Sure. I mean, I think it's important to start with growth. You have the virtue of looking at lots of companies, so you can choose companies that have underlying revenue growth. For us, growth doesn't necessarily mean the fastest growth, though. We want companies that have durable growth, because what's most powerful about the growth is not really the rate of growth in the first couple of years, it's letting that growth compound. And so we care a lot about growth, but we also care about the company's competitive position. So we want companies that are really adding value to all of the constituencies in their value chain. They're adding value to their customers, they're adding value to employees, they're adding value to suppliers. All of that, kind of gives the companies reasons to exist and allows them to kind of exercise their ability to grow. We also think management is really important when you're down this far in the cap spectrum. We sort of see everything from the founder CEO to the professional manager, and it's not that one is better than the other, but certain flavors of those types of management teams can be better in certain circumstances. And also, we're dealing with a space in the market where the hype cycles can be pretty profound. We can have really high highs and low lows for expectations around these companies, and so We also think it's important to understand really what is stock discounts, because ultimately we're buying a share of a business, and we want to be buying that at an attractive valuation against that growth and return opportunity.
In terms of the types of growth that we're looking for, we love to find businesses that have very predictable or recurring revenue streams. So a company that can go into any fiscal quarter or ideally fiscal year and know with a pretty high degree of certainty what 80 or 90% of their revenue base is going to look like. That allows you to plan very well around your cost base for a business if you know what your top line is going to be. And so it just provides so much more certainty and an ability to think long term about how to create value for all members of the ecosystem, as Brian was describing. The last thing I would just add as it relates to management team is one of the things that we like to say is we kind of cared about ESG before it became an acronym, because as small and mid-cap investors, governance in particular has always been very important. And Brian hit on that. You see a wide range of governance practices amongst small and mid-cap companies, some that are quite strong and others that are somewhat lacking in terms of investor protections.
And ESG means environmental, social, and governance principles, essentially,
Exactly.
when it comes to investing.
Exactly.
You kept coming back to management, and I wanted to ask, a lot of these companies, they're not being potentially widely followed by a lot of analysts. There's not a lot of write-ups on them. So how do you get to know the companies? Are you having to travel across country to meet with businesses and learn about the management teams?
Well, that's where we really think that our dedicated team of small and mid-cap investors that we have here based in Denver really helps us. We have 11 dedicated team members focusing on doing small through mid-cap research. Each of them has one or two sectors of expertise, and they get to know their sectors quite well. And then we sit within a broader dedicated research organization, both in Denver and globally, that is also sector focused, that allows our analysts to understand what's going on in the ecosystem in which their companies are operating. Oftentimes, larger cap or global companies are our companies' competitors or customers or suppliers. Mm-hmm. And so having regular interactions with their peers and allows us to have a very good look at what's going on in the ecosystem that our companies are operating in.
One of the things that's so strong about the research effort we have here is that anyone can go meet with the CEO. We go and we meet with executives and travel to see them, and that's important. But our analysts will often know the CEO from his or her prior role as CFO of another company in the industry, or a line manager at another company, and they've seen that person's career arc, and have a lot more insight than you might from a 1-hour meeting with the management team.
Most investors, they tend to have this home bias when it comes to investing. They like to own the stocks of companies that are domiciled in their home country because that's what they're familiar with. What would you say to a non-U.S. investor? What case would you make to them to invest in U.S. small and mid-cap stocks?
Janus Henderson was formed between a merger of Janus and Henderson, and as we've gotten to know some of the folks from the legacy Henderson, which are mostly in Europe, the European market is profoundly different than the U.S. market in terms of sector constituencies, the growth profiles of the companies, and I'm not saying one is better than the other. Different markets will do better at different times, but the diversification benefit, if nothing else, of being exposed to U.S. small and mid-cap growth as a foreign investor is worth consideration. We have in our benchmarks exposure to software, semiconductors, biotechnology, medical devices, emerging consumer growth companies, internet businesses. And it's not to say those aren't a part of other indices in other countries, but not to the same extent. And so it's really a way to participate in a different piece of the global economy than an investor might from a home market point of view, if that home market is not the U.S.
I might just add that at least if investors are looking for some exposure to the United States, that actually small and mid-cap relative to the entire opportunity set of investing in U.S. stocks could be compelling at this time, because many of the multinational companies that tend to be large cap are experiencing some headwinds due to the appreciation of the U.S. dollar, and many of our companies have much lower exposure to international revenue streams and therefore don't have that headwind. headwinds. So it's a little more of a tactical comment, but it's a compelling time to consider small cap and mid cap companies on that front as well.
Well, I think that's an important point because there are lots of headwinds in the economy right now. Companies are dealing with elevated inflation, rising interest rates, labor shortages, supply disruptions, the list goes on. And I imagine for a growing company, small and medium-sized businesses, that it might be a bit of a challenging time. And so how are these businesses performing in this environment?
I think it goes back a little bit to what Brian was saying earlier in terms of some companies have benefits in that the law of large numbers is not working against them. They're still at a relatively nascent stage of their growth profile. They have long runways of growth, a long time horizon to grow and compound at attractive rates. And so it's not to say that small and mid-cap smart growth companies don't have any economic cyclicality. I would argue that they have a little bit less than their large cap peers.
I would say one thing that's important is focusing on a company's ability to finance its own growth and its unit economics. And we've lived through a period over the last decade where the cost of capital has been exceptionally low. And there have been a lot of businesses that have been funded in a sort of, if you build it, the profits will come mentality. And that's not to say that won't work in certain circumstances. Sometimes it does. But when we live through a little more economic volatility, particularly when that's coupled with monetary tightening, access to capital becomes a really important input to the value creation equation, if you will.
I think one of the things that's really important to consider is the classic case of the company that has a $1 cost for a unit that's sold and they're selling it for 95 cents and looking to make it up on volume. That is a strategy that can work if you are trying to get big, fast money, free or cheap. But in periods of greater economic distress where interest rates are going up and capital markets get a little more constricted, oftentimes that financing can be shut off very rapidly and companies can run into real problems. And so that's why we care very deeply about the unit economics to make sure that each unit that a company is selling has a very attractive margin profile and that it can be sustained in a variety of economic conditions.
You've both been investing for more than 2 decades, and interestingly, you've spent all of that time here at Janus Henderson. And I wanted to learn a little bit more about why you stuck around for so long and why you've chosen to concentrate your careers on the small and mid-cap space.
I've been doing this for 28 years. I get excited to get out of bed every morning and come in and do research on small cap companies, in large part because the people running them are so interesting. Oftentimes we're dealing with founders who started a company and that individual was told that, even though you have this dream, it's probably never going to happen and you're not going to be successful. The odds are against you. And in spite of those long odds, these individuals have made their companies successful. And they have fulfilled the dream that they had, and they're employing more people this year than they did last year. And it really reinforces your faith in the capitalist system. And so that's a fun element that I've always appreciated about the job. I've always enjoyed the people that I work with, and we have an amazing team that also gets me excited to come to work every morning. And then lastly, I would say that for me personally, it's very compelling to be able to invest on behalf of regular investors who are saving for an important life event, whether that's their retirement or their kids' college fund or buying a first house. And that gives me great meaning personally for what I do every day and something that I always keep at the front of my mind in terms of the responsibility that we have with our clients' assets.
I would agree wholeheartedly with everything Jonathan said. I would add, the only business Janus Henderson is in is money management. This firm believes in its soul that creating strong risk-adjusted returns for our clients is what we are here to do. And so the firm has really empowered its investment teams to succeed. We are given the resources and space necessary to deliver strong investment outcomes. So it makes it a very compelling place to work if you really enjoy the challenges of investing.
And my final question is, do you ever get curious about the companies that you once invested in that have now gone on to graduate to the large cap or mega cap or giga cap space? Do you ever sort of dig in and do the research on those companies now just to see where they are?
Well, I think we have a great tradition of, hopefully on the small cap side, we're kind of the R&D lab for what will eventually become mid-cap stocks. And we do have a great tradition within the SMID team of very long duration of ownership and even passing along directly the shares that we own from one portfolio to another. It's a great success story that we always celebrate.
We certainly keep an eye on some of these companies that have graduated to large cap. You know, this great investment outcomes in the small and mid cap space are not achieved by making 15 or 20% in a lot of stocks. They're achieved by making 5 times, 10 times, 20 times your money in a handful of stocks. And so those are the companies we pay the most attention to, and we certainly watch them as they grow up.
Jonathan, Brian, thank you so much.
Thank you.
Thank you.